Hey, good morning, traders, and welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, and we've got a lot to cover today. So, there's been a lot of economic data coming out. We know that has a big impact on things like gold and the S&P 500. So, that's exactly what we're going to be covering. Right now, it's about 8:20, and at 8:30, we have initial jobless claims and continuous jobless claims. These are very important reports to give us a little bit of insight going forward into how strong the job market or how weak the job market might be. If we see a lot more weakness in the job market, that could help prompt the Fed to look for more rate cuts going forward. That, along with cooling inflation, is exactly the combination the Fed likes to look for to give them more certainty to have that dovish stance. A dovish stance means that they are looking for more rate cuts. And as you guys probably know by now, when the markets and when they're dovish, we have a very bullish and optimistic market in terms of the S&P 500, the Nasdaq, and even gold as well. So guys, smash that like button, hit subscribe if you're ready for a great show because Market in the Morning starts right now. Right, good morning, everybody. Good morning. Good morning. So, the first thing I do want to cover today, guys, is definitely going to be a little bit of our economic calendar. So, what we see over here on our economic calendar on market is we do have the initial jobless claims with forecast being around 215,000, bank forecast 215,000. Now, our prior was 208,000. Now, what's cool with market is we could hit the brain icon, and it's not only going to tell us a bit about what this report actually means, but it's going to give us a historical data chart. And with the historical data chart, we could sort of see, has there been any consistency on this report going forward? First thing I do know is this is a very inconsistent report. We see that it's very choppy. Sometimes it is way higher than expected. Sometimes it is way lower than expected. But something else to realize when it does come to initial jobless claims is this comes out every single week. So this isn't as big of an impact or as strong of a news catalyst as something like non-farm payroll is. So it's important to keep an eye because it is the jobs market and those all come together, but it's not going to give us one of those crazy moves we're used to when we do have that 8:30 news. The next news catalyst we have is continuous jobless claims. Now, what's cool again with market, another great tool. Yes, sir. Market is killing it, man. Absolutely killing it. We've got some great updates coming out too, so you guys beware. The next one we want to cover is continuous jobless claims. You hit the little brain icon, and now we have our two tabs open. We could click back and forth between those reports. So continuous jobless claims, this feeds into labor market side of mandate, signals pace of layoffs and hiring slowdown, occasionally sparks moves in front-end rates. So remember, we're talking about our rates and interest rates, and risk if sudden spike flags hard landing. So again, if there's a huge spike in continuous jobless claims, it's most likely going to have a big impact on our non-farm payroll. And if that hits higher and higher right now, I believe it's at 4.6% was the last time I checked. If it moves higher, right, we're getting into very horrible and bad territory in terms of the employment market for the US. We're seeing areas when we reported 4.6%, I believe it was the prior NFP, two non-farm payrolls ago. That is the highest point we've been at since 2021, the end of COVID, 2022, the end of COVID. Because of that information, it's making us sort of look at the job market and say, okay, we see there's weakness, but why? Well, we know inflation has a lot to do with it, but what else has a lot to do with jobless claims? Well, that's going to be AI. AI is nothing to do with any of the economics, but it does now because AI is integrating itself into every job, every position, every industry out there, whether you're a trader, a doctor, a writer, an actor, a photographer, a videographer, editing, anything AI can do, which is anything, it's integrating itself, which is making jobs easier. It's making outcomes quicker to get to, but it's also making it harder for employment and finding those jobs. Hopefully, at some point, AI can start to turn around and instead of taking jobs, creates more, maybe AI assistants where the people are assisting and showing the AI to continuously do the right thing. But that's something that has a big impact on our fundamentals and our ecosystem, right? Our economy. Because of that, we're seeing these poor initial jobless claims, continuous jobless claims, and non-farm payroll. We do have New York Fed manufacturing at 8:30 as well. Now, you can see that this is a medium on our rating. So it's not a high importance, it's a medium importance. It is still going to give us a little bit of insight. Remember, all economic data gives us some insight into what's going on in our fundamentals. That's why it's so important to use a tool like Market. But it's also important to be able to tell which one's most important and which one might not have the biggest catalyst. Now, initial jobless claims signal timing of the next Fed cut, high frequency gauge of labor market softness. Now, initial jobless claims, guys, is different from continuous, and I'm sure you guys understand right off the names, but initial jobless claims are for the people who are just getting into the jobless area, just filing for unemployment. Continuous jobless claims are those who are continuing on that. So initial jobless claims, it might come in softer than expected, but that doesn't mean markets are getting better, right? So we have to take everything for account and really understand the report we're reading. Continuous jobless claims, I'm going to take a look at this one and show you guys how it's been pretty consistent. But look at this, guys. Back in October, zero, nobody was jobless. Congratulations. Or it was a government shutdown, and that's exactly what it was. Government shutdown, so we were not getting the economic data that was coming out. There was never a zero. Not everybody's working. It has been consistent, 1.96, 1.97. It looks like recently it has fallen a little bit to about the 1.9 area on the continuous jobless claim. So we'll keep an eye. Higher claims usually weigh on USD and support front-end duration as markets price more easing. So again, higher claims, more easing. More people jobless, that's going to cause the Fed to cut more rates so people can afford more. Watch claims trend versus recent NFP and upcoming CPI in relation to late January FOMC meeting. Guys, this is exactly what I was telling you about. We want to watch the jobs market and we want to watch non-farm payroll, which is also jobs, and the CPI, which is our inflation report. All of those reports come together and give us some insight into what the market wants to do. We could take a quick look at our Fed Watch tool and just keep an eye and see where we're currently at. Now, obviously, right now, we're looking at January, and we have a very low, just a 5% chance that they cut rates. They are not cutting rates this month. March, we're looking at 22% chance that it is down another 25 BPS. So we're seeing a bit of a decline going forward. April, we see it's a bit higher to 32. July, about 47. So they're expecting, what the Fed Watch tool is telling me right now is by June, even by July. Ooh, look at that. July actually dips a little too, because look at this. July dips because now we have a higher chance here at the 300 to 325 range. Whereas over here by June, they're now looking for a 47% chance that we cut at least 25 BPS by June. Now, this isn't the best percent. This isn't really the most ideal of what I'd want to look at, but combining the 47% and the 18%, it's going to be about 50, about 67% right there. And because of that, that's giving me a little bit more of some insight to say, okay, well, even though these next few months, they're feeling a little more dovish. I'm sorry, they're feeling a bit more hawkish. They're still overall looking for cuts at some point this year. The question then becomes, when are they cutting? And that's why market is so important. So we can keep an eye on some of these economic data events, because this is what's going to tell us, hey, jobless claims are flying, inflation's cooling, they need to cut rates now. But if the job market, initial jobless claims, our jobless claims are pretty straightforward, they're pretty in line with the forecast, then that gives the Fed a little bit more breathing room to stay patient and hold back on the rate cuts. As you guys know, there's a lot going on in the fundamental and in the economy aspect of what's going on between the DOJ and Trump, and of course the Fed as well, where the Fed opened a case against Jerome Powell, claiming the case is because of a 2.5 billion renovation that went over budget. But in all reality, Powell even mentioned himself that it is most likely because he refuses to cut rates as fast as the president requests, which we have to remember, guys, the whole point of the Fed is that it's separate from the government. The Fed has to be a separate entity so that there is complete transparency. There's no bias to it. So if we get a new Fed speaker, we get a new Fed head chairman in about, I think, for the midterms, and if they are a little bit more connected with somebody, well, then that might add a bias to the Fed, and we want to be careful with that. But also give us some economic relief and say, okay, look, we have a new Fed. This one wants to cut rates. He's a lot more dovish. That could help markets soar. So we do want to be careful and keep an eye. Taking a look at gold, guys, we can look at gold on markets, really break it down and see what's going on. Because the first thing I note is that we're extremely range bound over here. Yo, market team, guys, I got a good idea. Right here, this inline, give us the ability to pull it to the right, pull it to the left, to shrink that area over here to get more chart on our screen. So taking a look at gold right here, what we're seeing on our, at least on our, oh, look at that, on our annotations is the gold chip. So Trump chip tariffs announced, gold drops sharply. So this is pretty big. Trump also recently announced that that the US will be able to take 25% of chip sales. So that would be Nvidia, AMD, but that would also bring money into the economy. Okay, guys, here we go. Economic news just came out. Let's see. Initial jobless claims came in lower, outside of expected range, came in way lower than expected, which would be very bullish for the dollar. So we could see the reaction there. Look at that, a bullish reaction on the dollar. I pulled up a gold chart first. Gold's giving us that bearish reaction. Now, if I am looking at gold, the first thing I would want to note, fundamentals keeping us a bit more bullish, but technicals, we're within this range since Monday. Right now it is Thursday. We've been in this range all week. When that's the case, I really like to look at a weekly time frame just to get a bit of an idea. You know, are we holding previous highs? Are we continuing higher? Yep, data's out. And let's see. So again, below expectations, bullish for the dollar for initial jobless claims. Continuous jobless claims also came in a bit below expected. So forecast is 1.89 million and came in at 1.88 million. Not the biggest drop there. Let's see. So higher claims weigh on USD and support front end. Lower. So if it's lower, it would be bullish on the dollar as well. So again, that's something else that could be impacting us and possibly giving us a sell-off on gold if the dollar wants to find support. Come to the hourly time frame. So something I might look for today, guys. And here's our first trade setup that we're looking for. Guys, I love these shows from Market in the Morning because it gives us the opportunity to go over what's really moving markets, which is our fundamentals, the economic data driving them as well, and we can find some key levels and great trade setups. So the first thing I would note is that this zone I have marked out here, now this is a 4-hour demand. Technicals are great, but fundamentals move markets. We've been holding this area since Monday. So how am I going to trade this? Well, we had economic news today, and I know that that could be a little bit of a catalyst. We've been in a range for the past few days, and I know at some point markets will want to break out of that range. So something I'm going to look for is if we fail this support zone, I'm going to look to see if we can somehow look to break it to the downside. And on that break, we create some type of pullback, and we're going to use this support as resistance, and I might look for a pullback on gold. Now, we do want to make sure that our fundamentals line up with that as well. Remember, we were looking a bit more bullish because of all the uncertainty and worry in the economy. So let's run it through market and see what market has to say. So day trading is giving us a slightly bearish bias, and we could come down here to our what's impacting, to our why really. And the day trading daily bias on GC, which is gold, if you guys trade XAU USD, it's going to have similar fundamentals. Gold pulls back $14 to 46.09 as Trump comments signals Iran de-escalation, even though they did mention that they're going to attack again. Lowering safe haven flows while oil plunges. Okay, cool. Security lowered at AI Udid base. Israeli evacuation in Lebanon mixed. So it seems pretty 50-50. Off of reading this breakdown of gold that market provided, China cut structural rates 25 BPS, adds liquidity pressure on gold. It's very back and forth. Hawkish would be a bit more bearish. Dovish would be more bullish. War talks, more bullish. China cuts rates, more bullish. So it really is a bit more of a 50-50 in terms of the fundamentals behind it. But when we're looking at gold, we're looking at these US markets, probably going to be a bit more curious as to what the US has to say in terms of the Fed rate cuts and everything else in between. So Fed Kashkari says way too soon to cut rates today. Okay, that's pretty clear. I think we understood. We went over our Fed watch before, and we know it's a 5% chance. So most likely not cutting rates today. Take out your poly market, make some bets. Fed Stick says still need to be restrictive, passive posture inappropriate. JP Morgan now expects 0 Fed rate cuts in 2026. This is huge right here. JP Morgan now expects 0 Fed rate cuts in 2026. That makes me want to short the SPY, the ES, the NASDAQ. I know we're going over gold right now, but these fundamentals will also have an impact on all, right? And that's what's, again, so great about market is it's going to tell you all of these impacts. Trump comments ease Iran fears, oil plunges, just like it mentioned up here. Now, that too, guys, if he's easing fears, right? So when there's concern or worry in the world, there's a war going on, we're not sure. Gold is a safe haven asset worldwide. It will move higher. If they're easing fears, guys, what's the opposite of worry? Ease, right? We're cool. If that's the case, gold's going to pull back, gold's going to cool too. Security warning lowered at US. Trump imposes 25% tariff on advanced computing chips. Now that's pretty big. I'm definitely going to want to keep an eye on something like Nasdaq today, especially because of that tech announcement, Trump imposing 25% tariff on advanced computing chips. So that's a pretty good rundown of what's going on in the fundamental analysis on gold. We do see we've been making higher highs and it is having these strong rallies from bullish momentum. Let's see. Chip tariff announcement, sharp rally. So it seems like chip tariff announcement, we had a rally, but then we ended up pulling back later that day. Trump orders U.S. refining Venezuela oil, gold surges. So safe haven bid grows on Trump threatens Iran tension. So look at this, guys. The last time safe haven bid grows on Trump threats from the Iran tensions, we had a massive move high. Now, again, we're seeing the opposite of that, where he's saying things are easing up. We might be able to see a massive move lower. Not only is he saying that we're easing up on that when it comes to Iran, and that could give us a move back lower because of the safe haven aspect, but then we also had the initial jobless claims we covered too, which is also giving us more of a bearish stance because it was more bullish for the dollar. As we see, guys, we're looking at gold right now, and it is trying to continue lower. Me personally, guys, when we're in a zone like this that I've seen has historically been holding on whether it's gold or the S&P, I want to be crazy patient. If the markets have shown me that since Monday, we've historically been holding this level, buyers are clearly in this area, I'm not going to short it when we're in that area. What am I, crazy? But I'll let it sort of dictate and help me see where markets are trying to go next. If we fail this, where's my next area of interest? It's going to be the next point where price consolidated before we had a big move up. Bro, I know Jeeve the GOAT, man. He's out of town today. So definitely drop a like, guys. Usually Jeeve joins me for these Thursday shows. He is out. It's Capital Hungry. Make sure you guys go follow him on Instagram as well. He is great, man. He's got such great analysis. We really break charts down pretty similar to, which I absolutely love finding another trader that has a similar style. Just sort of confirms the ability of that trading and the consistency of that trading. Say, hey, listen, this is something that's consistent that we're going around in. So yeah, let's take a look. Somebody asked in the comments, USD JPY. Now, I don't trade Forex myself. I trade futures, the S&P 500, which is ES, NQ, which is the NASDAQ, and GC, which is gold. But with market, we can look up any asset we want. So USD, JPY, and even though I don't have knowledge of it, when we add it to our chart here, market's going to give me everything I need to know about it. So let's come all the way down. USD JPY. Dude, yeah, that's right, man. Smash that like button. Yes, sir. You know it, Oz. USD JPY consolidates near 185.50 as Bank of Japan escalates intervention warnings. Okay, so that's something to be careful with. We see slightly bullish on the day trading. We also see slightly bullish on the swing trading too. And even just looking at this market chart, I see that we are above that old area of resistance of that 158. So if I'm going off that 158 and we're coming off of that, I would really like to see a move higher. Because we have that slightly bullish on the market as well, I'd really want to see that 159.45 get tested today on the USD JPY. So let's take a look. Could again look at the day trading bias on USD JPY. trade sideways after Wednesday's pullback. Bank of Japan officially escalates intervention rhetoric, with Chief Cabinet Secretary skipping the name, warning of action against excessive one-way moves. However, Prime Minister Takashi's snap election victory is expected to unlock higher spending, pressuring the yen. So pressuring it higher, right? So keep an eye on that. Rate differentials favor USD as Fed holds steady, while Bank of Japan remains cautious on hikes. So again, what's supporting the bias? Rate differentials between USD over JPY. Bank of Japan, no clear rate hike plans despite inflation. And carry trade demand continues exploiting yen weakness. So what could change the bias, though? Bank of Japan governor signals continued rate hikes in forecast if met. So that's something pretty big, almost like when we're trading gold or the ESNQ in the markets. When Japan has some type of switch in their cuts, whether they're cutting rates or they're hiking rates, that's going to have a big impact on the USD JPY. So definitely keep an eye on that. Absolutely appreciate you, man. Keep an eye on that and make sure, guys, when you use market, you want to keep that high impact tab up there too, because that's going to give us some strong impacts. Here we go. Fed Goolsby. Fed moved to slowly to combat inflation in pandemic. Oh, Fed moved too slowly. They had the wrong two in there. Like, what are they talking about? Services inflation not yet under control. This I do believe is true. Best thing about recent inflation data shows possible waning of tariff impact. That's a huge thing right there, right? Now, if you're looking at some type of high impact news, absolutely, guys, you got it. If you're looking at a big headline like this and you're like, okay, that's big, that's high impact, but how does that affect it? What does that affect? It tells you what it affects and how it affects it. And if you want a bit more of a breakdown of that headline, you hit the little brain icon here, and it's going to tell you exactly what's going on there. Goolsby comments suggest tariff inflation may be temporary, supporting the one-and-done narrative for price pressures. However, market reaction remains cautious due to persistent core inflation at 2.6%. Guys, we covered that this past Tuesday when we had CPI and we had our Market in the Morning show too. Very important, inflation and jobs are the number one dictators of Fed rate cuts, as they should be. Concerns about tariff durability and Fed's commitment to holding rates steady through mid-2026. While the data shows inflation cooling towards the 2% target, equity markets fail to sustain relief rallies. That's a big one right there, right? And that also comes down to the NASDAQ and the S&P 500 to say, okay, well, do they really want to hold, and can they hold? Well, they're failing to hold the rallies. It's something I want to be aware of. Now, I do want to cover NASDAQ pretty briefly because we mentioned earlier the impact that NASDAQ might have due to that recent action that Trump took to say, hey, listen, we're going to start taking that 25% of the chip sales. So we're going to come down to market and we're going to just see a quick little rundown of our daily bias on NQ. So right away, I do always want to try to make sure that our swing trading bias and our daily bias, day trading bias, are within the same bias. Sometimes if our day trading is slightly bearish, we might be better off looking for scalps. Whereas when both of them are lining up for the bullish, we might be better off and be looking for a good day trade so we could hold and let our winners run. And again, that's a great confirmation and confluence using market. Now, looking at the NASDAQ, we're going to scroll down. We're going to see what's impacting NQ right now and what could really make it sell off. Because I'm looking at longs right now, I am curious as to what's holding this bullish bias, but I'm also a bit more curious as to what could change it. So banks like Goldman and JP Morgan delay 2026 rate cuts on resilient labor markets. I don't think they're too resilient. We've been going over the data here, guys, in Market in the Morning. Quite honestly, it has not been anything to say, wow, look at that, jobs holding steady. Let's take a look at market. We can look at our, let's see, our economy tab. That's going to give us our different charts to see, okay, unemployment rate, 4.4%. So remember, guys, I mentioned a little bit ago, December was 4.6%. Then it came in, well, December for September was 4.6%. Now it dipped again to 4.4. So I wouldn't say it's easing. 4.4 is still a very high percentage, and it's coming right off of that 4.6. Looking at the market chart right here, guys, if anything, this is telling us it's still been increasing. Last February, it was only at 3.7%. Now we're still sitting at 4.4%. That is not easing to me. That's increasing in the past year. So again, with market, we're able to see all this like that. When it comes to using economics and looking at the data, a lot of big institutional traders, they need something called Bloomberg. And I don't know if you guys have ever heard of it, but it is a terminal that's thousands and thousands and thousands of dollars, extremely complex, has like a whole keyboard integration and everything. It is crazy. Market is that, but in my opinion, way better because you don't need to have a degree to figure out market. You don't need all of this experience to figure out market. You really just need to download it, play around for about a day, and you sort of have it done. You could also, guys, make sure to check out our YouTube channel here. We do have some great videos discussing and using it as well. And guys, don't forget, you guys can follow me on social media, is at Trading with Kev on Instagram. I do post economic and fundamental breakdowns every single day of what's going on in the market and how it's going to impact the market. So very important to be aware of that. Something I'll note, guys, NQ versus ES. ES has a bit more slightly bearish on the swing trading. NASDAQ has a bit more, where is it? A bit more slightly bullish. Now, I do believe ES is a bit more slightly bullish on the daily time frame as well. And we could take a look at that right here. And the reason I believe ES is a bit more slightly bullish too is because of we're near all-time highs. We're very close to all-time highs, really. We were just at them on Tuesday. We were at brand new all-time highs on the S&P 500. So when that's the case, it does become a lot harder for traders to trade these levels because there are no historical levels to work off of. So that's why when we're day trading, we want to possibly look for hourly areas of consolidation, like right here. We see that price rejected this point. So I might look to delete this small one right here, or maybe I'll look to keep it blue. And I'll look to try to trade off of the levels that I have. So I'll look to short the highs or buy the lows or on the breakout retest of that blue zone. And again, lining up with the fundamental analysis of it, what is keeping ES slightly bullish? Well, let's see. Kashkari wary of rate cuts on inflation. So again, that would really be keeping us more on the bear side. Absolutely, Sophie. I'm happy to help. Yeah, dude, market is the Bloomberg for retail, just even better. Boasted calls for continued restrictiveness, and it's really the Trump imposes 25% tariff on advanced chips. So that's a pretty big one. In my opinion, I really want to see how NASDAQ opens up, how NVIDIA opens up, and see the reaction that investors have to this news right there. Let's see, any other big high impact news? Fed's Goolsbee agrees with Powell's argument over investigation into Fed. So again, we mentioned that earlier, guys, and now market's telling us too, like, listen, this is not, doesn't really seem to be a clear investigation or a true investigation. It's been something that it's a little give or take, but really seems more like it's an investigation due to him not cutting rates as fast as the president is requesting. So Chicago Fed President Goolsbee agreement with Powell's reinforcement Fed independence amid the DOJ investigation, signaling no policy shift towards faster rate cuts. So again, it's almost like this investigation was meant to spook. Instead, Powell's standing on business, man. Hit that like button if you stand on business like Powell. Powell said, I'm not shifting policy. I don't care. You could put every investigation on me. My term ends this year. I'm not shifting yet. Markets already showing disbelief with rebounds in stocks and stable bonds view this as neutral, prioritizing economic data over political noise. Very important, guys. We want to try to keep, I mentioned earlier how the Fed and the government should be separate. Well, when the government tries to step in, that makes political pressure, political noise. A lot of times that brings uncertainty. And when uncertainty enters the economy, more so the ES, the NQ, the US stock market, uncertainty brings a lot of selling. Something to note, guys, on the daily time frame on the ES is this massive sell-off we had last year. I'm sure you guys remember from about late February to early April, we sold off over 20% on the S&P 500 and over 25% on the NASDAQ. Why? Because this is when Trump started to announce, I'm going to add new tariffs on Canada and Mexico, right? Now, that is a pretty broad statement. That leads the economy and the market to not really know what's going on next, leading to uncertainty, leading to a major sell off. That was the catalyst that sold us off last year. What catalyst provided the reversal? Well, that was when Trump came back and said, all right, now's a good time to buy. Here's a tariff relief on all countries but China. First trade deal, part one in the books for 90 days. And that gave us a massive rally back to the upside. Part two was right over here, somewhere in this area. That's when he announced the 90-day stay on the China tariffs. That also gave us some continuation. So now at this point, we see we've only been making new all-time highs, higher highs, higher highs. Where is our next catalyst and what is our next catalyst? This year being midterms is extremely hard on the stock market. So we want to be super aware of that and really see who could possibly win it. There's a lot of uncertainty and a lot of concern. If you guys watch any news channels, President Trump is very concerned if they lose midterms. His exact words were, we have to win midterms or I'm going to get impeached. That's a catalyst right there. I don't care if you're Republican, Democrat, a horse, a donkey, doesn't matter. It's a catalyst. We're all day traders. And as day traders, we have to be aware of the catalysts moving markets. If we try to get in every little move we see without catalysts, we're going to blow account after account after account. If we're consistently coming in, we're doing our fundamental breakdown, we're making sure everything lines up, and we're trading the seasonality of the markets, then we're able to consistently take profits from the market themselves. So very important stuff, extremely informative. Guys, I appreciate you all for joining today. Absolute killer episode of Market in the Morning. Definitely hit that like and subscribe and join us Tuesdays and Thursdays. If you guys have any ticker recommendations, definitely please let me know. Again, looking one more time at gold, and we'll look one more time at the dollar as well. We see gold is still continuing to try to sell off, but it is still finding some support in this zone. So again, my current bias, my current analysis on gold right now is I'd like to see a break of this zone and then a retrace. On the retrace, that's where I'm going to be looking to enter a short position. Now, the reason I would be looking to enter a short position is because of a few of the fundamental catalysts that we've seen this morning. That being, way too soon to cut rates. We know that that's going to have a negative impact on gold and the S&P 500. JP Morgan now expects 0 rate cuts in 2026. Again, a negative impact. Trump comments ease Iran fears. Negative impacts. We're seeing so many bearish fundamentals starting to line up on gold. And that's not even considering the economic data we had this morning that's helping keep the dollar higher. So now that we see the dollar's moving higher, gold has some bearish catalysts and is trying to move lower. I'm really going to want to see this break down and break lower. But then comes our technicals to say, hey, listen, if we somehow hold this area, then that means our fundamental catalyst was not strong enough, right? That means markets aren't pricing in no more rate cuts. And that's also another clue. So that's why it's so important, guys. Use your technicals, but definitely use your fundamentals. It's gotta all line up together. That's how you could find those A+ trades and A+ setups. Guys, I hope today's Market in the Morning was as killer for you guys as it was for me. Absolutely great breakdowns, great trade setups to look for today. Very excited to see what markets have in store. So make sure you smash that like and subscribe button. Let's run us up to 3,000 followers here on Market AI. And I appreciate you all. Follow us on social media is market_AI. And I will see you guys all next Tuesday with me and Alab, one of the co-founders here at Market. Take care, everybody, and have a great rest of your day and trade safely